Hello, everyone. Welcome to the Veterinary Business Podcast, your ultimate resource for developing a successful veterinary practice and career. I am Narain Arulraja, the founder of the Veterinary Business Podcast and one of the co-hosts. On this podcast, we bring insights and expertise from industry-leading doctors, experts, and thought leaders. We cover a wide range of topics, including practice management, marketing strategies, leadership, HR, and more. Whether you are a practicing veterinarian, a practice owner, practice manager, or a student studying to be a veterinarian, this podcast is tailored to help you navigate the unique challenges and opportunities in the business of veterinary medicine. Every listener to this podcast is welcome to visit www.veterinarybusinessinstitute.com for additional resources and tools to support your growth. And remember, you can subscribe to our podcast on iTunes, YouTube Music, Spotify, and other popular podcast platforms. Today, I'm excited to talk to Tom Seeko and CJ Burnett, co-founders of Florida Veterinary Advisors and Next Step Finances, and co-hosts of Smarter Vet Financial Podcast. Our topic today is going from business dependence to financial independence. Let's jump in. Before we get started, Tom and CJ, why don't you take a minute to tell us a little bit about yourselves? Who are you? How did you get into veterinary medicine? Tell us your story.
I'm Tom Seeko, co-founder of Florida Veterinary Advisors and co-host of Smarter Vet Podcast. It's awesome to be here, Narain. I'm glad we're able to make this work. I've been in the financial planning business since 2011. So it's been quite some time. I went to school for finance, got into the planning business. I worked with teachers for a little while beforehand. And over time, I've just gotten a big admiration for being able to help people with their habits, their behaviors, really being able to plan, which has gotten me to where I am today, where I work with my counterpart who's on the show here. I'll let him talk on his own behalf. But yeah, I'm a big soccer fan. So if any of you out there who are Premier League fans, go Liverpool. You never walk alone. But beyond that, I got a lot of interesting hobbies and things that I like to do along the way. I'm a big reader too, if any of you like to read out there.
That's awesome, Tom. CJ?
Yeah, my name's CJ Burnett. I'm the other co-founder of the Florida Veterinary Advisors and the co-host of the Smarter Vet Podcast. I got in the business around the same time Tom did, 2011. Really just, I grew up in financial stuff. I mean, when I was 16 years old, my mother flew me out to an Investors Business Daily Symposium out in California, and I just caught the bug. As for all things finance at that time, the idea of having money, making more money, like really intrigued me. And so, that was kind of the introduction to it. And then getting into finance, getting a degree in finance, that was kind of most of my background was really security analysis and asset valuations. And so it obviously makes sense for me to then go into the advisory world, and then even more so with what we do, because we're so niche with working with business owners who are in the vet space on just overall general financial health, business valuations, exiting, figuring out how they're going to do those things.
Thank you so much, CJ. So I'm going to go back and forth. So let me ask this question of Tom. Tom, you are exclusively or mostly focused on vets, so clarify that. And also tell us how financial planning helps veterinary practice owners and veterinarians, because you have a lot of experience. I would love to hear from you.
So yeah, a lot of our clients over the last, I can't even, 2014 is when we started working within the veterinary community. And I know when I had made a transition from one company to another, I really wanted to have an impact on an industry that we knew was we could help, that we understood their challenges, the obstacles that they were up against. And I had opportunity of working with a couple of different industries, but I found veterinarians to be what I'd call the humble doctor. And it was very fun and interesting working with them, because a lot of them they're good people. They want to learn a lot of things. Like veterinarians in general are just awesome to work with. And over time, initially started doing a lot of personal planning, and then started transitioning more on the business planning side of things. And, over the years, our business has grown to, I would say, probably 60 to 70% of our clients now are in the veterinary profession. Our main company being Florida Veterinary Advisors, and we do have other clients that we work with outside that were, human doctors and other business owners that we support as well. And over time, it seems that there's been a big hole that has existed there for a while from like actual consistent guidance that people should get. So like, one thing that we've heard over and over and over again is that, we get all these professionals that talk to us, they give us some guidance around, some kind of insurance we need to buy, or, put some kind of retirement plan in play. But when it really came to seeing the bigger picture of things and understanding how to plan and implement the right things at the right times, there weren't a lot of people doing that. It was more of like, I have this product, this nice shiny thing here, you should buy it because you don't have it. And then it was just really becoming this part where people were feeling it was more of a transaction than it was planning. And over time, one of the things that we've positioned ourselves as being more of like a coach or a guide for people to help them walk through certain decision-making habits, the things that they're trying to create along the way, helping them maintain good behaviors, helping them create new behaviors. And a lot on the business side of it, I would say something just to throw in here, we find that especially the past generation, a lot of their plan is reliant on the sale of their business at some point, and there hasn't been much planning done, and there hasn't been a lot of planning with regards to what that transition is going to look like. So their entire retirement income plan is dependent on what their business sells for. So depending on the environment, really what's going to happen is that they might not have enough to be able to make that transition. So we're helping a lot of practice owners understand, what are the steps necessary to really prepare for that eventual transition. But in the meantime, if you're not there yet, well, how do we go about building up a very robust and balanced plan that they have the options they can sell on their own terms at some point?
Thank you so much, Tom, for that clarification on, what exactly, do we mean by financial planning specifically for veterinarians. Thank you so much, Tom, for explaining what do you mean by financial planning for veterinarians and why you got into it. I really enjoyed your answer. Let's jump into the next question that we have from our audience. What financial advice do you have for vets that are thinking of starting their own practice? Again, CJ, take it over, please.
Well, I think starting a practice, there's obviously a whole host of questions like location, how much capital do they need? And I think the key is just focusing on one thing at a time and knowing that you're not going to have all the answers whenever you start actually doing it. A lot of people wait a long time to try to gather all the data to make sure to confirm the confirmation that they've already confirmed that it's going to be okay to go out on their own. And what's funny about that is oftentimes we tell people, look, it's really an exploratory thing. It's an adventure. It's a journey. You don't want to try to gather all the data because you're not going to be able to get all of the data before you start. And the second that you get all the data, guess what? Data changes, rents change, locations change. So oftentimes when we're coaching people through starting a practice, we're trying to get them to just take one step at a time, focusing on what's the most urgent, most important thing, and then working their way through their list with all the questions, all the things that they have to think about, and just do one thing at a time. And don't wait till the end. Don't wait till you have all the data in order to start making decisions and start moving and getting the bank approval for the loan and doing all those other things.
Thank you, Tom. I appreciate. I think you're saying be thoughtful, and those strategies you shared. I mean, CJ were awesome. Let me flip back to Tom. What are three main things that veterinarians can do to prepare themselves for retirement, besides relying on the sale of their practice if they're a business owner? I guess, business. Selling your practice most practice owners say that. Perhaps the practice is their biggest asset. Maybe number two is their home, or sometimes the order is reversed based on how big the practice is. But that alone is not enough, right, to sustain your lifestyle at retirement. So what can they do during the years as a practice owner to set themselves up so their retirement is as pleasant and as stress-free as possible?
Something that should be added onto that is that based on the environment, because there are a lot of corporate buyers that are out there that have been, depending on the side of the practice, these people are cashing out with big chunks of money. So the lifestyle that they had probably is very easy to maintain, but for the majority of people who are selling, or as the economic environment changes, it's kind of like these windows of times that maybe some people, they hit the jackpot and then others aren't so much. And, realistically, we should never be waiting for that perfect time to try to make it happen. Especially there's clients of ours too that have asked, like, should I sell now because I'm getting X amount of dollars, but they're only like 45 years old. And it's like, what are you going to do next? So the biggest thing that I would say, the first part here is being able to have a systematic plan of how they're using their veterinary practice to build personal wealth. And what happens with a lot of owners that are out there is that money comes in, money goes out. And, at the end of the year, they're being told they owe so much in taxes, especially if they're a S corporation or pass-through entity. Like, I was just having a conversation with someone about this, and she's like, I only take 150,000, but her taxes show 400,000. And we're like, okay, so you're making, where's the other $250,000 going? She's like, I don't really know. I have no clue. And this is where a lot of owners, when they have a business, they just kind of let it go back into the business in the assumption that it's going to help create or increase, maybe not even think it's going to increase the business value. They just think it is somehow, by organically just kind of happening. But usually money is getting pushed back in the business or put in places to where it's not really building a lot of extra worth for them. So it's like, if we can get on a plan of being able to set aside, our target when we tell people is at least 20% of what is being generated from profits and income should be getting pulled from the business for personal wealth building purposes. So to diversify and be able to balance out what that sale of the business would be in the future. So as long as we get into that habit, and there's two things to put in here without, for the brevity of our conversation of that. One is that there is a systematic amount that can be pulled every month from the business. But then there's also what we call dead cash sweeps. So like every so often, there's going to be an excess amount of money built up in the business that should be getting pulled out. It shouldn't just sit there. If tax payments are current, enough money's in there for operational purposes, for any business type stuff, the rest should be getting pulled out for personal building or spending if you want to. The second thing, what I would say in this is like really start planning in advance of how someone wants to actually sell out of the business, because depending on with this transition, a lot of the times people do not have the option of what direction they want to go. And I will say lately, this is my personal opinion that I've formulated towards this, that I think a lot of these people who are selling to buying groups and corporations is purely because they're getting a lot of money offered for it. But a lot of them are also just burnt out. They're like, they've hit the end of their career and they're ready to just get out. And they see, the gold, the pot of gold at the end of the rainbow, and here it is. And they take whatever gets thrown at them. And some of them are pretty strict in their principles, but being able to determine, do I want to sell it to another veterinarian? Like, what am I doing to prepare for that? Do I want to sell it to a corporation? Getting a better understanding of what that's going to look like, which on the other side of this, I'd say that the third one is just getting a good idea of what a valuation of the business would be, to be able to balance that within to the overall asset mix that someone's going to have. Because if we're going to eventually want to retire, if we don't have an inventory of what it's going to look at the end, because if your lifestyle is a certain amount and we haven't really prepared in advance to know what kind of spending, what you're going to be capable of spending, or what it's going to look like for income purposes, with how your business is going to take into the equation, that's something else that really should be looked at in the part of the conversation.
Thank you, Tom. I think I loved all these 3 points. The first one is, taking money away, right, on a periodic basis and once in a while. Of course, don't take more than, what you need. The second one is work on creating this asset that's going to be worth a lot. Instead of letting it just happen and you're desperate and you take the first offer or the second offer, you really say, okay, this is the kind of practice I want to build, and what do I need to build it? And if I do that, how much am I going to pay? Like, be proactive about making the value of your asset, which is practice, bigger. And as part of it, you can even reduce your stress and the workload, right? You could say, hey, I want to make a ton of money and only work 3 days a week. So how do I do that? I need to bring other people and just plan it and make it happen. The third point you made is have a financial plan and then know where you stand at any given time. In other words, this is how much money I want to have saved up, and this is the lifestyle I want. And, according to my plan, where am I? Am I on track? Am I not on track? So you're always calibrating, right? Of course, things can happen. All of a sudden, COVID happened and inflation hits. All of a sudden, we all need a few extra, millions or whatever you want to call it, because now a dollar is not what it used to be pre-COVID. It has become less valuable because everything is more expensive. So, so those are excellent points. So thank you for that, Tom. Appreciate it. Let me switch gears and go to CJ. Do you have any advice to veterinarians who are trying to pay off student loans? Maybe talk about, like, in your experience, what type of loans are you seeing today versus maybe a few years ago, and where do you see that headed? And maybe share some success stories of people who have done it well, and what advice you have for them.
So obviously, it's a big problem in vet med. This, being able to go to school and then coming out of school with 2 times, 3 times what you make in an annual salary gross of taxes. What we've seen over the last, I'd say over the last decade is, yes, the student loans have gotten larger, but by and large, incomes have grown slightly faster than the growth of those student loans that people come out and graduate with, right? So it's always been a problem. It's still going to be a problem. I think most of the advice that especially when people get out of school, and especially if they're, and when I say out of school, like day 2 out of school, right? We're trying to help them recognize that how their balance sheet is actually constructed. The left side is assets, the right side is liabilities. If people have a ton of liabilities and no assets, they're effectively living paycheck to paycheck, right? We're living paycheck to paycheck, trying to make sure that we pay the debt, the minimum payment, trying to make sure that we're paying for our lifestyle. And so we try to help people understand that they want to save money and pay off debt at the exact same time, because oftentimes the asset side of the balance sheet is where the control lies, especially if our income is uncertain or variable, or if I don't even know where I'm going to end up living in the next 3 to 5 years, which a lot of people get out of vet school, they take a job, they may move somewhere, and they don't really know if they're going to be there in the next 10 years, right? So it's better to kind of just get somewhere, pay some rent, get some income underneath your belt, get some mentorship, start learning vet med on the floor, like real time, and get a ton of experience first, but really, really, really focus on strategically saving and strategically paying off debt so that people are not overweighted on one or the other. They don't have so many assets that there's just a lot of cash sitting on their balance sheet that it could have been better used by paying off debt, but there's not so much debt, or I should say so much money going to debt, that they constrict how much money makes it to the left side of their balance sheet, therefore constricts their ability to control the next job that they take or the next move that they have.
Absolutely. That makes a lot of sense. So I guess let me ask you a follow-up question, CJ. So people are coming out with that, like, share a success story, somebody who did it well. Like, give me some numbers or give me some data on, like, how long it took, how did they pay it back, like, how did they think about it?
Well, I think this is going to be a little bit more exciting for the business owners who listen to this podcast than the non-business owners. But we had a couple where they were probably 3 or 4 years out of school. It was actually one of our first clients ever. They had roughly about 3. I actually I did their review meeting I want to say it was about 6 months ago. And I could actually look at their balance sheet when they came to us, because we actually take snapshots of like what everything looked like. They had, I believe, if I recall correctly, roughly about $350,000 of student loans. There was 2 vets. They got married. They ended up opening a business right around the time that they became clients. They made about $180,000 between the 2 of them at the time that we started working with them. Today, their income's somewhere around in the 600 range. They've got multiple locations, right? Their student loans now, we're looking, I don't know how, like I said, I think it was probably 7-8 years. I'd have to go back and really look. But over the last few years, they've effectively been able to greatly reduce their student loans for sure. But the even cooler part is their net worth is now in the multi-millions. And now the student loans don't even stress them out, right? There's a little bit left, but like, it's kind of one of those things where they're at a 5.5% rate. Right now, if you take on new debt, we're taking on mortgages are above that now, right? So because interest rates have increased, and so they're making the decision. So debt is only dangerous to the people who are living paycheck to paycheck. because when you can't make that payment, that's a big problem. But when you've got the income and the assets that could support the debt, in fact, in 5 milliseconds, you have the capability to strike a check and pay off all your debt all at once. That in that position, debt is not necessarily dangerous, because they've got enough money, they've got enough of a war chest, so to speak, on the left side of their balance sheet to be able to pay off the student loans. God forbid something really bad happened to them, they could do it tomorrow. It's a personality thing. I think as far as when people get to that spot of whether or not they pay off, because I let them know, like, look, if y'all want to pay them off, you just pay them off. And they're like, nah, no worries. We'll just continue making the minimum payments. They're going to be paid off automatically in the next 2 to 3 years anyway. So right. It's like, even if they just make the minimum payments, it literally doesn't affect their lifestyle. It doesn't affect their income. Doesn't affect their ability to live and save money for what they're trying to do. And they're even considering right now selling the business, all of the locations actually. So when I think of a success story, I think of that person only because they've been with us for so long, and we've been able to see their balance sheet go from a negative $450,000 of net worth to like positive $2.5 million.
Wow, that's amazing. And that's like what, maybe 6-7 years?
Mm-hmm. Yeah, I think I want to say it might be a little bit longer, right. But I do know that their income went up dramatically. Their income was above 600,000 for a little while, and it came down because obviously they started pouring a lot of money back into the more locations. And then they've also had some other hiccups, but still a good income.
Yeah, I mean, going from minus 450 to 2.5 plus million is a huge change of fortune, right? That is a great success story. Thank you for sharing that. Tom, I have 2 more questions. I'll ask you the final question, and then I'll ask CJ to give the context and everything else. So if people want to, follow up with you guys, they can. So Tom, let's say somebody who was, I don't want to say asleep at the wheel, but let's say didn't really focus on finances, didn't really do the things you guys are suggesting in this meeting to create a better financial future. Title of the podcast is From Business Dependence to Financial Independence. Let's say they didn't work on financial independence. Now they wake up, they listen to the podcast, and they are excited. What is the one area you think they should focus on as they start getting their finances in order?
The first place should be to get organized. And when it comes to planning, it's very hard to know where the destination or where we're trying to go if we don't know where we're starting. And it's like, I keep thinking of when there's so many people out there who say, I can't save money. I want to pay more towards debt. And when we say to them, okay, well, how much money are you actually making? How much is going out for expenses? How much money you're actually saving? And I love when people give me the, I do mental accounting or mental tabulation. And I'm like, it might work for some people. I'm like, I'm sure as heck doesn't work for me. So it's the same thing like with planning for a business where, or just personal finances and looking at the business, there's so many moving pieces that over time, there's just a culmination of so many things that are going on. And when I say get organized, to give some more context to that, is using the concept of a balance sheet. But then also adding other elements to it. So getting organized, like understanding an inventory of all assets. So like, if we look on the personal side of it, like what do I have in assets, things that have value to them? What am I carrying in debts? Could be debts that are due on retirement accounts. It could be things, student loans, mortgages, understanding how you're protecting yourself from different risk, auto, home, umbrellas, disability, life insurance, legal documentation, what kind of money you're making, what's getting saved, what's getting put in different places, like really, truly getting a good sense of what's happening there. And then on the business side, it's flipping it around and saying, okay, well, what about if I were to look at from my business, like if something happens to me, like how does my family get impacted if I were to become sick or injured? How does my business get impacted if people in my business, the key ones really were to become sick or injured? Or if I weren't able to work anymore, how would the bills keep getting covered in the business? Like, what are my plans on this? Like understanding the protection area on that side, taking an inventory of what type of benefits that are being offered for attracting good talent, to rewarding and for retaining people, understanding more about what the business is doing from an income standpoint. Because what's so interesting is that I would say so often that we see And I love asking this question when I first sit down with a practice owner, and it's not really meant to try to make anyone feel silly. It's more of a, what does your business do in revenue? Like, what did it do last year? And most of the time, most of them can spit that off really quick. But then when I ask the follow-up, I'm like, okay, what did you do in profits on your business? And they're like, well, my accountant knows that, or my other professional knows that. And I'm like, you should know that, because that's why you're in business, realistically. I mean, that's your money. That's what you're making. So getting an idea of what that looks like too. And so just like really getting a handle of organization. I mean, it's not the simplest thing at times to do. I mean, we have a platform we use with people to help do that. But I would say even just taking the basic concept of assets, liabilities, cash flow, and protection items, and just start trying to document things. You could literally open up a Word document if you wanted to, if that was like a simple starting place.
Yeah. So to summarize, at least the way I understood it, let me summarize it. You need to know at the end of the day how much you owe other people and how much you have, right? Meaning whether it's in your bank account, whether it's in that real estate, whatever it is. So when you tally it up, you want that number to A, be positive, and B, be growing every year, right? And hopefully growing as much as possible. If let's call that the net worth, right? Your assets minus your liabilities. If that net worth is growing every year, let's say growing by $500,000, you're doing an awesome job. If it's growing by 300, you're doing an excellent job, and so forth, right? So you can set yourself some targets and goals. So what you're saying is a lot of people don't even know this. They just ignore it. They have no idea what's going on. So you're saying that's a good place to get started. And also the second point you made is also be proactive. What if something bad happens? Like, have you thought those scenarios through? Like, and are you covered? Because you never know. I mean, life is very unpredictable. Am I summarizing anything you want to add, Tom?
I think you're putting a good bow on. I think from with the whole factor of wanting to be positive is definitely a good direction. I think whenever people are looking to plan and there is no clarity of what we have to start with, it's always very hard to know where to go next. Because if we aren't if we're not protecting ourselves properly, we don't know how we're saving money. We don't know what really our end goal is from any of this. Then, and we don't have a kind of a current check-in for it. It's hard to know if we're even progressing or not in our finances, and if we're going to end up where we want to be.
Absolutely. Let me switch gears to CJ. CJ, a few questions for you. One, final thoughts, right? We're going to wrap this up. You have the final words. Two, how do you help practices? What is the next step you would recommend? And of course, how can they get a hold of you?
Final thoughts are kind of just, so if there's anything doing this for the last decade plus, if veterinarians could just keep it in their minds that taking control is not hard. It seems like it's a lot. It is overwhelming, but starting is really the key thing. Don't worry about where you start. Just start. As far as how we work with veterinarians as a whole, we literally, our parent company, we actually called it the Next Step Planning Group, right? That's actually, so the Next Step Planning Group, the reason why we called it that, and this is the one that kind of, Florida Veterinary Advisors is among the same group of the companies. The Next Step Planning Group was really, we titled it that so then people could always realize that our mission is to provide a different way of thinking, to make financial decisions easy so they can spend time doing other things. So whereas, yes, finances are overwhelming, not really sure where to start. If you just start, but more importantly, if you have somebody, a guide, if you will, who can come in, help organize someone's complete financial picture for the business and their personal, and then see all of the decisions that person faces all on one sheet of paper, and then not just give them all of the information that is relevant to their situation, but translate that information in such a way that that person knows how the knowledge that they've now attained is going to apply to their individual situation to make sure that they build lasting wealth, help their families, help their communities, never go backwards in the sense of not knowing exactly what they need to do next. As long as we focus on the next step, we're always going to be making progress, and focusing on progress over perfection at the end of the day is always going to get us where we need to go. If we wait till we have all the data and we're perfect, which oftentimes that's how we tend to want to approach problems in our financial life, then we'll almost never start. And so that's I think at the core of how we help veterinarians, it really comes down to getting them organized and creating a plan that they're going to never regret all the actions that they took.
Thank you, CJ. How do people get a hold of you, CJ?
The easiest way is to go to flvetadvisors.com. There's a contact us button. If you want to also go to the website, that's where you can find our podcast, a link to our podcast. We're on Spotify, Apple, anywhere. If you guys find, if anyone out there gets a platform or is listening to things on a platform and we aren't on it, let us know. We'll get on it. So we're on all the platforms out there, but the easiest way to do is flvetadvisors.com. That's Florida, flvetadvisors.com. We do work in over 40 states. We're not just in Florida. We just branded Florida because, we live in Florida and palm trees are something we enjoy. So
thank you. Yeah, definitely. We're going to put all the links so people can get a hold of you. One thing that you said, I really, that resonated with me, CJ, is the idea of next steps, right? I mean, if you look at my career, we have 250 people. We have been helping veterinary practices from 2007. Every year, I knew what my goals are for the year. I just did it for 20 years. That's all I did. I look like a, smart guy with a large company and whatnot, but it's just next step, one step at a time, year after year, 20 years of, and all of a sudden, overnight success, 20 years in the making. That's the part we don't emphasize, but there's no secret. The secret is just having a plan every year and then working on achieving it. That's it. Doesn't matter where you start. Like you had a client who started at minus 450. Like it really doesn't matter where you start. Just what's my plan for next year? And then once you get there, what's my plan for next year? Once you get there, and I guess what I'm hearing both of you say is that's what you help your clients with. Help them really think from a net worth standpoint. Where am I today? Where I want to go, where I want to get to. And then of course, how do I maximize the net worth I have? So if I have 2 million, how do I make most out of it?
There is one thing that at the same time, I don't think we give enough time to is the psychological aspect of this. Like, just like so it's an overnight success, but it's consistency. And it's really hard, I think, especially for our brains. And because we all have emotional templates from childhood that we bring into adulthood. And if we can recognize and understand how we operate and become students of ourselves, as well as just students of finance, we more often than not can figure out how we're going to get there in a much easier path than if we're just copying what other people are doing when other people have very different mentalities and very different emotional structures. So I just want to throw that out there as well. Like we do take into account a lot of the habits and behaviors of what people are working through and the problems that they're experiencing, and then helping them find customizable solutions to help them get where they need to go.
Great point. So you're saying everyone is different, everyone is unique. So understanding the emotional side and the personal side is critical for what you guys do. That's awesome. Thank you so much, Tom and CJ, for joining us today and talking to us about this amazing topic. And I really like this topic, and thank you for coming up with the title, Going from Business Dependence to Financial Independence. I also want to take a moment to thank our listeners. We appreciate each and every one of you. We're going to include all the links. We're going to have video clips from it, tons of tools you can use. Hopefully you can share it with your friends and colleagues. Definitely subscribe to our podcast, share it on social media platforms. If you like it, write a review for us. That would help other doctors like you find the podcast. Until next time, keep striving for excellence and making a positive impact in the lives of your patients and pet parents. Wishing all of you an amazing week ahead.